Hey there, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 20th of March, 2026. Stocks ended lower. They did regain some ground coming into the close. I think even the Dow and the Russell might have actually managed to eke out a small gain, but S&P and Nasdaq finished lower. Very choppy session. This Iran conflict is dragging on. Both Benjamin Netanyahu and Trump both saying that essentially that things were winding up to paraphrase basically, and Trump had one of the possibly the biggest foot and mouth moments with the Japanese Prime Minister today at the White House. It was quite frightening how little filter the leader of the free world has. As you can see here, it's pretty mixed overall. Micron, there's concerns around capex. I think there's a lack of general concern overall about input costs for making these chips and memory as well, because they do need certain elements to make complex process, but they definitely need some of the elements coming out of like natural gas and urea and things coming out of the Middle East, which have spiked in price. So overall, bit of a meh kind of night in terms of the stock movements. Micron seeming very much like the reaction to the Nvidia result, like outstanding result, but they just investors or fund managers or whatever just wanted to pick at the seams and find an excuse to sell it. It is on a pretty high PE, so I kind of get that as it stands at the minute. We are obviously down for the week overall in every market except for the Russell by the looks, and not by a huge amount, but importantly, the S&P 500 had its first close below the 200-day moving average since, it'd be quite a while. It'll be on this chart here that I was going to show you. So broke back above the 200-day moving average like last May, and has been above ever since. We've got the 100-day moving average rolling over, the daily MACD in a negative territory, and the simple moving average smooth indicator that we use here back into neutral territory. We do have quadruple witching tonight, which is all of the options expiries in futures, stocks, etc. So I dare say that's what that buying was leading into the close. They tend to try and hold prices relatively stable. We could have a fairly choppy and choppy/volatile session due to options expiry. If there's any significant move in the market, it could snowball as well because of options expiry as well. So they're but generally it'll sort of stay around where it is now, and then the any volatility that's been pent up will largely possibly flow through to the next week. But overall, you've got daily and weeklies now in the ASX 200, the Dow, the S&P, the Nasdaq, the Russell, sells or strong sells, and then China Hang Seng Euro stocks at neutral. So can't see this. Not feeling overly positive about the market. Obviously, yields are higher. US dollar's been generally higher over the course. Well, it's down 0.5% over the course of 5 days. But the gold. Those long-term yields and concerns around inflation immediately hitting. Those precious metals. I think it's probably a buy the dip situation there. Silver being hit the hardest, but gold down 8% for the week. About 14% off its highs, or maybe 15% off its highs. And these industrial metals. But I mean, crude was down sort of 4% from yesterday. And then you've got coal still rallying. So overall, I mean, there's not really much to say in terms of we've got basically until you know what date this is going to end. You can't really make too many investment decisions. So in that vein, I released an article on Livewire yesterday, and I've done a massive amount of research and pulled in and built a probabilistic curve, which basically put it around about somewhere in the June, some area of June would be the most probabilistic, and so I'm not saying that's a definite end date, because they're just that in even formulating this, it was there's so many factors at play, but yeah, but basically around that June area is a likely wind up of the conflict. The one thing that is part of the research as well, so this is interactive and you can get it on Mosaic, but you can click on these tabs and it gives you outlooks on, the effects for oil supply, what the current oil supply is, and etc. And some different curves and different scenarios. So really, really useful in terms of getting your head around it, and really easy to use, and it's not as not dense in terms of not dense in terms of like having to read it. You sort of very much just sort of gets to the point. So yeah, we really are. I mean, say it is a June end, we're probably going to see higher inflation, and yeah, but it could very well be transitory. But I mean, that's about 102. Well, that'd make the conflict around about the 120-day mark. The White House has asked for $200 billion in extra budget funding overnight as well, which, despite what Trump and Netanyahu have been saying overnight, that doesn't scream the conflict's going to be over soon, considering that's a 20% budgetary uplift because their budget's $1 trillion. So really, and I don't think the Iranians are going to let go of this either. So whether the US backs off and the Israelis back off, it's a different, it doesn't mean that the Iranians will. So, but as well, that even aside, private credit, and I do have to, I'm going through and really vetting this today, but this was this was on X.com. But private credit defaults surpassing 2008 level. For a bit of context, private credit wasn't as popular back then either. So, I think that high default rate, there would have been much better quality back then. I think all the dumb money was going into mortgage-backed securities. So, I'm just going to do a little bit of work on this, but that 9.2% is not it's not a good sign. I think it's alarmist to compare it to 2008 because I think we're in a very different world. But then the banks obviously funneling, 250 odd billion into private credit markets. That's not them investing in it. That's them sort of backstopping it in a way. So, and this is the whole thing with these sorts of things. Not all private credit is bad, but it's, a couple of bad actors can ruin it for everyone, and default rates go through the roof. We're going to see, like once they can't backstop it anymore and get it through, that's when contagion starts to spread. So we saw the likes of Fannie Mae and Freddie Mac, who are listed but are semi-government organisations, drop 10 to 15%, at one stage over 20%. Last night, on concerns of inflation and no rate cuts coming and possible mortgage defaults, etc. The credit spread chart is now back to this is definitely lagging, and that's the blue part here for the credit spreads is back to where it was sort of in that May area, and that's a comparison of like corporate debt versus treasury debt, and obviously the concerns around inflation are holding that number down as well, because usually in these sorts of situations, bond yields would go down, not up. I think the long-term effect, I think the dampening or the hit to economic growth will far outlast the inflationary effects, which means that, essentially we'll start to see that steepen quite hard. And as you can see, when it goes up, the market and that's the S&P overlaid, and it generally goes down. So, not being alarmist, but definitely while we're being distracted by Trump saying stupid things and the Iran crisis going on and blah, 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 you've got to be across this, because this could get, when these things go badly, they go badly very fast. And once it's too late to react, it's too late to react. So overall, something to be very wary of. It won't be good for the banks. and the general financials. And we do have a strategy potentially coming up that will actually hedge off that private credit risk. So if you want to hear about that, you'll have to join Mosaic and get on the recommendations list. But for those of you who've got private credit out there, and I know a lot of people do, it's not all bad. But if you're feeling a bit nervous about it and you want to hedge, obviously you can scan and get Mosaic. You can call us on the number on the website, or you can email us at invest@mpcmarkets.com.au. For those of you who haven't tuned in before, to Bulls versus Bears, a podcast with myself, Kai Chen, Jonathan Takadina. That'll be released this afternoon as well. A bit of a wrap up of the week, a lot to cover. We'll probably dive a little bit deeper into that private credit risk and more about where we came to the conclusion on that end date for Iran, the Iran conflict, and what the knock-on effects will be. So it'll be fairly meaty episode today. If you watch this daily, make sure you like us or share us online on social media and subscribe to the channels. It really helps us out. Thanks very much, guys. Have a great weekend, and we will speak again on Monday.